not everyone in the market or every economist thinks that we are experiencing stagflation or at risk of it right now, but discussion of it is back. We've been talking about the possibility of stagflation once again. So we wanted to break it down. What exactly are we worried about here? What is stagflation? Well, effectively, it's right in the name. Stagflation equals stagnant growth and high or rising inflation. It is relatively unusual here, and there's no strict definition of what stagnant growth is instead of just going sideways and what high inflation is. It's all relative, but typically growth and inflation go together since there is high demand, companies then have more pricing power. But right now we have this external economic force that we've been talking all about, that is tariffs, that could force prices up at the same time as it could potentially slow growth. And it's at a time when even before the tariffs have taken effect, anticipation of them has created some ripples in the economic data. So let's go through some of the data points that we've gotten as of late. One of them that we watch, which is a compendium of economic data points, is the Citi Economic Surprise Index. What this looks at is economic reports that are beating estimates to those that are missing estimates. And effectively what you have right here is expectations have not been beaten as of late. So as this has gone down, it means more reports are missing than beating. This is the zero line. So that's the line between more missing than beating or more beating than missing. Right now, that line is going down. Another thing, of course, that we continue to watch as a measure of whether growth is slowing is the unemployment rate. There, we've got relatively smooth sailing here. The unemployment rate still remains at 4%, relatively healthy level. What about the inflation side of the picture? Well, here we look at what the Fed looks at, core PCE. This is the preferred inflation measure of the Fed. Right now, we see core PCE at 2.6% for the most recent month. Now, that is going towards the Fed's preferred target of 2%, but as you can see here, it's sort of going sideways. So we're not seeing that much progress on this particular measure. And if you look at other measures like CPI and those that are sort of what people are actually spending on, in other words, that include things like food and energy, we're not seeing as much relief there, perhaps, as investors would want. And of course, what effect will inflation see from the tariffs? Well, a recent New York Fed survey that just came out today, they surveyed New York and New Jersey area businesses, and they talked to services firms and manufacturing firms and asked them, how much do you think your costs are going to go up? Well, you saw deceleration here after the peak in 2022, but now we're seeing a little bit of a re-acceleration in expectations for what's going to happen to their costs that could then feed through to price increases that will hit their customers. This is a potential, it's a survey, but we'll see what happens. And then finally, just wanted to touch on the growth side of the equation with the Atlanta GDP Nowcast that they do, where they, on almost a daily basis, they're pulling in different economic data to form an estimate, a real-time estimate for what first quarter GDP is going to be. Now, right now, it's at negative 2.8%. As we've talked about this measure before, we do see it change quite a bit before we actually get the first quarter GDP reading from the government. But this is one of the things that is raising some concerns about the stag part of stagflation. Are we seeing stagnant or even declining growth at the same time that we're, at the very least, not getting as much relief on inflation as economists might want?